Hello traders, Jean here from BecomingTraderFX.com, and in this video we will go over the GBP US dollar trading opportunities we had today and yesterday. And in this video you will actually learn how you can trade the daily retracement. So if you are not a new trader and you actually understand the way the markets move, then of course you already know that we have three different directions when trading. We have either an uptrend, we have a downtrend, and then we have also a sideways movement. And in this case, on the GBP US dollar, if you just follow this recent price action, what do we see? Do we have a bullish structure, bearish, or sideways? So just by looking at the recent price action, you can see that overall we have this bullish structure. And in this bullish structure, when the market is trending to the upside, we have of course higher lows, we have higher highs, and you can either trade the moves higher, the leg up, or you can also trade those retracements on the way to the upside. So this is also what we did here on the GBP US dollar so far this week, because the market, as we said in our weekly video, in our weekly forex forecast video, we said that after this long leg up higher, you can also expect a possible retracement soon. And this is just the way the market operates. The moves is of course the move to the downside is at some point expected and also healthy for the market, because the market is not just rushing to the one direction all the time, but we have also we have to also have these retracements on the way to the upside. And on the GBP US dollar, how you can trade the retracements? In this case, once we got this strong bearish candle here, we started looking for potential opportunities to the downside on the lower time frames. Therefore, if the daily is pointing to the upside on this way lower on potential retracement, what we are looking for is a potential bearish structural shift on the lower time frames. So after we got this bearish candle here on the daily time frame, of course we said we can start looking for potential opportunities to the downside. So this is the candle that closed on 29th of August. And if you go to the 4-hourly time frame, the 29th of August is of course here. So at that point of time, if you just follow the price action on the 4-hourly, we can see that market was at that point of time, it was in the bullish structure. And then we had, as we got this strong bearish candle, we actually got lower prices. So this was the recent swing low, and as the market pushed to the downside, we got actually a lower low, which is the first sign of potential structural shift. And what we had also on the way to the downside, we had also this bearish shift, bearish fair value gap zone displacement, just as an extra confirmation. And as the market opened on 29th of August, we said we can look for potential retracement. So this previous short-term low was broken, and on the breakout to the downside, we had also very important a new lower low. So what is the confirmation for possible structural shift on the 4-hourly time frame? We need to have this retracement, and we got retracement. If you measure from the swing high to the swing low, we got this retracement, as you can see, exactly to the discount area. So we had this swing high, market pushed to the downside, we had lower low, and then market retraced into the discount area. And at that point of time, what we are looking for, what we want to see to confirm this potential structure shift to the downside, is of course a potential lower high. So if the 4-hour is pushing to the upside and we see a lower low, and therefore also extra confirmation, fair value gap displacement here in this case, what we want to see is of course a potential reversal, which means we want to see lower high. We want this top to be formed there, and once the lower high is established here and price starts respecting that level, in this case the discount area, then of course we are looking for possible structure shift in at those levels up here. So at that point of time we are looking for structure shift on the lower time frames, on the 1 hour or 15-minute time frame, in case the market want to move lower and therefore seek this sell side liquidity resting below the recent lows. So this is your first target that you want to aim for with your lower time frame trades, using and combining that with a 4-hourly time frame. So now if we start here, we can mark this level up. Let's mark this level up, the discount area, 50% level, and we can go to 15-minute time frame or 1 hourly. So we are looking, as you can see, this is the 4-hourly price action. Price moved down 100 pips, retraced 50 pips and more back into the discount area, and then what we are looking for here is a possible structure shift. So do we have a possible structure shift here on the 1 hourly? Yes, because just by looking at this window, 29th of August, what do we see? In Asian session, market was pushing to the upside, and then we had nice breakout to the downside. Price broke these short-term lows here, and on the breakout to the downside, what do we have here? Between first, second and third candle, we have displacement. Between first, second and third candle, we have high of the day here, market pushed to the downside, and what is interesting and very important here, this low is not didn't touch and didn't break the low of the day before from yesterday. So this sell side liquidity was still untapped, and once the market formed this structure shift to the downside and retraced 50%, that's your level to enter. So you can use the Fibonacci from the swing high to the swing low, and once the market retraced back into the fair value gap zone and discount area, that's your entry. As soon as the market comes back to those levels, you can enter, and that's how we traded the GBP/USD. Stop loss above the structure, above the high of the day, and what you want to target, as I said, the 4-hourly sell side liquidity, the lows, and the lows of the day at that point of time. So we are looking for around more than 1-to-1 in terms of risk and reward ratio. So this was beautiful structure shift on the 1 hourly, and if you go to the 15-minute time frame, you can see that there was also at that point of time, this was also the market structure shift on the 15-minute time frame, because what do we notice? In the Asian session, market was pushing to the upside, and then we had nice breakout, structure shift to the downside. We had this fair value gap zone. This was from the 1 hourly, but from the 15-minute time frame, we had also this fair value gap zone, structure shift as the market broke this short-term highs here. And the same thing as we said before, if you use the Fibonacci from the swing high to the swing low, and as soon as the market came to this level, you can look for entry, short, stop loss above the highs, above the structure, around 29-30 pips, and your goal is to target the lows down there about 32-31 pips. So you're looking for a bit of more than 1-to-1 in terms of risk and reward ratio. So this was from the yesterday. Okay, now let's do also the review of today's setup. So as the market came to those levels here and made a new lower low, we can review the price action again. You can do your analysis again for today's price action. So we are looking always for the same thing. If you watch all videos, then of course you understand what we are looking for. And what happened here, as we finish this first wave, we also have another opportunity today. So we had another lower high, market pushed to the downside, formed this lower low, and as the market retraced today before the London trading session, market retraced exactly to support and resistance, and also the discount area. If you measure from the swing high to the swing low, you can see market retraced exactly to the 50%. And same thing as we said before, once the market reaches this 50% discount area, you are looking for possible market structure shift on the lower time frames using the 1 hourly or 15-minute time frame in order to target again the previous lows, the sell side liquidity, the support using the lower time frame. So as the market respected this level today's morning, what we are looking for is either 1 hourly or 15-minute structure shift. So if you go to the 1 hour time frame, do we have anything here? On the 1 hour, as you can see, during the Asian session, market was chopping around. Then as we're getting closer to the London session, market pushed to the upside, reversed, but as you can see, it just broke to the downside. We had this shift on the 1 hourly here. You could trade this, as you can see, fair value gap zone between first, second and third candle as the market retraced into this fair value gap zone and discount area. But I didn't like this one. Why? Because if you compare it with the setup we mentioned before here, as you can see, the lows from the previous days were not tapped yet, but here is different. As you can see, the previous lows were already broken before the market retraced, and I didn't like this because the sell side liquidity was already taken and it was not a good setup here if you compare it with the setup day before. And this was on the 1 hourly, but on the 15-minute time frame, if we mark this level up, the discount area on the 4 hourly, if you go to the 15-minute time frame, you can see today's price action. Let me remove this level. So in the Asian session, as the market opened, we had this chopping around, and as we're getting closer to the London session, market pushed to the upside, created higher low, lower high, and then we had nice breakout structure shift to the downside. Previous short-term low was broken, and on the breakout to the downside, what do we notice? We have this displacement. So previous short-term highs were broken. We have this displacement here and small one here. So let me mark those levels up. So this level and also small one here. So previous short-term lows were broken, as you can see here, and this was your setup on the 50-minute time frame today. This high, market pushed to the downside, retraced into the fair value gap zone and discount area, so you could enter here, stop loss above the highs of the day, and your target would be, of course, the lows from yesterday. So you're looking for this profit target on the 50 minutes. So you're looking for more than 1-to-1 in terms of risk and reward ratio, almost 2 times. But why I said you could trade this? Because I didn't trade this setup today, and there was easy and simple reason. We had news in the London New York session, and therefore the news were exactly at that timing. And if there will be no news events, important red news, then of course I would trade this one. I was watching this setup, but I'm not a gambler. I don't trade on the news, and therefore I skipped this setup, even though that it was set up by the rules. It was by the rules, but as there was a huge red news event, then of course I'm not interested to trade it. I'm not here to give this trade 50-50% chance just because there are important news around the corner. I'm not a gambler, and therefore I want to put as much as possible of probabilities on my own side, and therefore I know each trade can be a winning or losing one, but if there is a news around the corner, the red news, then of course this just decreases the chances for let's say for trade to work out, and therefore this setup was as per rules, but I was not interested to trade this one. So yes, hopefully you learned something from this video to understand how you can trade the potential daily retracements. Of course, as I said before, we have bullish structure on the daily, but when the market is showing a potential reversal, then of course you can look for potential opportunities in the opposite direction. So this is how you can trade the markets on day-to-day basis, on week-to-week basis, and yes, hope you learned something from this video, and we catch up soon. Take care.